Nike reports yet another earnings and sales beat. The stock was ripping up, but at what prices can we buy the stock? Hey guys, today we'll be screening NKE through our three metrics to see whether the stock is trading at overvalued, fair, or discounted prices. From there, we should determine if the stock is a buy or not at current prices. With these metrics, we can also get the best entry prices for the stock. We'll also be checking their charts to confirm key levels and our entry prices. NKE is currently trading at 133.09 with highest price of 179.1. That's 25.69% of the highs. Current market cap of $210.45 billion dollars with PE ratio of 34.9. Looks expensive, but let's see. They give out an annual dividend of $1.22 a share, a yield of 0.92% of the current price. First metric, we want an EPS multiple lower than 3. It's 9.16. Well, that's expensive, but it doesn't mean it's not a buy. We just have to know why the PE is high or why the EPS is low. Based on EPS history here, they do have low EPS, although it's increasing, which is good. But look at this OSN, or number of shares. In 5 years, they only bought back 65 million shares. I don't know if that's too high or too low, but in general, we don't want companies to be buying back a lot of shares, especially if the stock price is high, because that's inefficient. So if they're not buying back a lot of shares, maybe they feel the stock is overvalued. I don't know. If you're in it for the dividends, I think it is safe at only 32% of the current earnings. Next metric, we want to pay a dollar or less for 1% of the money they're making, meaning we want to pay 1 PE or less for 1% of their margins. What you see here is revenues deconstructed, the costs and expenses they use to make these revenues. Net income is after taxes, and free cash flow they generate off of those revenues. The above values are in billions. Below are in percentages of the respective revenues. I'll show you the relationship of the cells. I've included the COGS and OE here, so we can have a general sense of how much they're spending of those revenues, and how high or low can they juggle these expenses. I've also included here the revenue growth to see whether or not we should pay premium for the stock. When I see two-digit growth here, easily I'd pay premium, but if I see this single digits, I'd rather not. It's important that I include this because even with the loss of revenues, they'd still make the same yields. That's why it is important for these companies to maintain their current revenues or even grow it by 1%. Of the four highlighted values, we'll use the lowest to divide the current PE, and we'd have a premium of 3.67. Guys, this is overvalued. This is overowned. If you're paying this much, why not just own a tech stock? But again, guys, if you're comfortable paying $3.67 for a dollar for growth or for hype or I don't know, by all means, keep buying the stock. Third metric, we want to know our discount compared to when the markets have valued the stock before by looking at the historical PEs. From this data, it confirms that the stock has always been trading at high PEs. But it also confirms that I'm not buying the stock. The stock is overvalued based on these metrics. For the sake of mapping where NKE is trading, let's use my multiples here. 1.25, 1.5, and 1.75. This is for EPS growth. Assuming that these PEs or their margins won't increase. Even with my multiples, beyond. It's beyond my multiples. It's still way above my multiples. My fair value of the stock is $36. This is when you multiply the EPS in my first metric and the yield or margin in my second metric. If you assume 1 PE is to 1 yield, 1% margin. My high entry price is $45. Guys, I have here $80 in my multiple. This is easily on my avoid list. I might miss out on the stock's potential run and 1,000 return on my capital, but again, if their financials won't confirm the price, I won't buy this. I'm not telling you what to do here. I'm simply presenting their numbers. If these numbers still look shiny to you, buy the stock. For companies with low margins, they have to be aggressive on buying back shares. The EPS should be the one adjusting, not the PEs, because as the price continues to go up, the fundamentals would lag. What I want for NKE is to trade sideways until the EPS catches up to justify the price. By their charts, key levels to watch is 80 and 40s. 40s is my entry price. I like how TradingView makes this easy for me. This is how a stock could easily be overvalued or overowned. This kind of stock is what I'd call a momentum stock. These are stocks who easily beats earnings, quarter over quarter. People keep adding more as they beat earnings. They're not thinking so much of the valuation. Do you want to see something brutal? Let's check NKE's intrinsic value by Guru Focus. Yep, it's 32.34. I have an entry price higher than this. This tree metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.